Oh, here we go. I'm sorry. Here we go. Okay, I think you can hear me now. Sorry, guys. All right, all right. Sorry about the delay. I was having, for some reason, my mic wasn't connecting for some reason. Again, thank you, thank you, thank you. It is 9:06. I want to hurry up and get started. Again, good evening, everybody. My name is Gregory Whitmire. I'm an IML student, Forex trader, all that kind of good stuff. And welcome to the Friday night session. This is Smart Money Fundamentals. We're going to switch up. Well, not switch up. We're still going to stay to the topic of smart money fundamentals, but we're going to talk about one of the most powerful tools that you have available to you as a trader and as a student of the IML Academy. Most of you all are already familiar with the harmonic scanner. We're going to talk about some specific tools and one specific tool and one specific strategy that you can lay on top of that already powerful tool that we have in order to even, well, it's like I like to think about it, not taking the signal, but becoming the signal. And that's why I got here. I wanted to learn how to trade. And I don't know, I recognize several names out there, but not sure how, each one of you all's trading journey, trading experience. But if that is your goal to become a consistent and profitable trader, you are in the right place. And again, I'm Greg. I'm just going to mute a couple of folks. And if you could, as you come in and out, please just make sure you mute your phone. If you do have a question, feel free to take yourself off mute and ask the question. One of the areas I like to get started with is the area of mindset. This trading is easy peasy, okay? Let's make no bones about it. Trading is easy peasy. What isn't necessarily such, hang on one second. Let me stop sharing again. Let me move this here and move that there. Then I will share. What's for me and everything I talk about, again, I try to put the framing around me, and I also try to make the assumption, hopefully not too far off, that we're more alike. Most of us are more alike than different. So when I think about, experiences that I've had, oftentimes they're all the experiences that other people have as well. I'm looking for whoever might need to mute the phone. I appreciate it if you guys could mute your phone when you get on. So anyways, what I am sharing here is where I always like to start. And again, like I said, in the arena of mindset, this is a picture that was shared with me several months ago. And what it is, of course, as you can see, hopefully you guys can see, it's, on its face value, it's fish in the water. But what it represents and what it was described to me as represented are the participants in the market. And you gotta really, really kind of get hold of this and not forget about this for one instant when you're trading in the market, because the foreign currency and digital market is as it's set up, is set up to take our money. And if you have any illusions that is anything else, you're wrong, because, and then, like I said, it's just set up to take our money. This is not a system that was set up designed to do what it's doing today, where it's in the hands of anybody and allowing us opportunities to make money in the market. But guess who we're in the water with? The other market participants are the major banks, large institutions, governments, again, all of the big money shakers and makers that participate in this market. They are the sharks. They are the ones that actually control the market. They are the ones that actually, their transactions, I should say, are what control the market. Their transactions are the one that moves the market. And then, of course, you have brokers out in the waters as well. And the broker is not your friend. The broker is his job is to take your money. Please understand that. And again, none of what I'm saying is intended to discourage, but to inform you. So then the steps that you take informed steps in order to make then profitable decisions for you. So back to the shark. The shark is, like I said, those big institutions, the mega banks, central banks, et cetera, et cetera, et cetera. The fish that are swimming alongside of that shark in the picture are what's referred to as pilot fish. And the pilot fish have learned something very simple. And that is if they swim with the sharks, they won't get eaten. And they also understand that if they swim with the sharks, when the shark does eat, because the shark is a living killing machine. So when the shark finds its prey and eats, they will eat as well. And that's how I kind of look at and approach the market. I'm not trying to get ahead of the central banks. I'm not trying to get ahead of the big institutions. I'm not trying to get ahead of any of those big movers and shakers in the market, because again, my little, $50 account, $200 account, $5,000 account, or whatever, has no or little to no impact. When you see candles building in the charts, those candles are based on transactions. Those candles are based on $1 trillion in transactions, oftentimes all combined, to form those transactions. So we come along with our little bit, and then and then along with not having again education as a bank trader, or that mindset that I want to trade just like the banks, I want to swim with the sharks. Then we find ourselves sometimes out in front of the shark, and then guess what? Boom, you get eaten. And so kind of just kind of boils down to, what you don't know will hurt you here in this market. So please, everything that I'm gonna say kind of all goes back to one thing, and that is, learn the skill of trading. And again, the hard skills are relatively easy. The soft skills, which we kind of spend a little bit of time here talking about, not necessarily, those are the skills that require you to master yourself. They aren't necessarily as clear cut. At least they weren't for me. So next thing I want to talk about is that area of patience. And well, actually, we'll talk about discipline first. And let's see that? No. Let me stop sharing this other one. All right. So discipline is the next area that I always feel real need to touch on, because again, discipline is one of those areas in our life that all of us as adults have had time to practice or need to practice in other areas of our life. There's discipline as in relationships, your girlfriend, boyfriend, wife, whatever, you have to have discipline in your relationships. You have to have discipline in everything that we do. Discipline as an employee, discipline as an athlete, discipline as whatever you're trying to do. It requires some level of discipline, some level of I have a plan. This is how I'm going to do it. This is how I'm going to approach this task, and I'm going to stay to the task until it gets done. And I will not be deterred. I will not be lazy about it. I'm just fully committed. And again, I'm going to develop those same areas of discipline that you have had to develop to be successful in any area of your life. You're going to have to develop those areas in trading. All right. So again, no different. Life and trading. Faith, same thing. We're all adults. We have had an opportunity to build faith throughout our whole life. And again, faith, whatever it means to you. Okay. Some people this immediately means like religious faith. Some people it means other things. It doesn't matter to me what it means, but as it applies to trading, it has to do with having some stick-to-itiveness and understanding that everything that I do is not necessarily gonna glean the exact result the first time that I do it. But again, I'm not going to be deterred. I believe in myself. I trust myself. I trust my training, and I'm going to execute. I have faith in these things that I'm doing, and I have faith and purpose in that. Why I even came here, and the things that I expected to get out of this journey. And I'm gonna digress just for a minute, because one of the things that you're challenged with, that as when you come into this field, you should be, if it should have been, if not, you are now, that that you write down why you're trading. Okay, and I know why I'm here, and it's that reason that determination to see my why come from out of my head and my heart and manifest itself on this planet that has to happen, and that's going to be a result of my discipline and a result of my faith to that task that I'm so determined to see materialize. Patience, 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 patience. I wasn't real big in like cliches, but this patience pays is a cliche around the world of trading and other things too. And again, patience, like discipline, like faith, we have a chance to practice this all the time. Okay, just in that little instance at the beginning here where I was just struggling with my mic, I had to exercise some patience in order to, get that little issue resolved. And you guys on your end had to exercise some patience in order to hopefully in bearing with me to get it resolved. Sometimes, there's more patience, depending on the situation, there's more patience required than other. But as it pertains to trading, patience pays, because again, everything doesn't materialize, everything doesn't manifest itself. Trades don't necessarily complete themselves within a prescribed trading time. I'll give you an example later on where I have found myself in situations where the only way I can do two things: I can lose a trade or I can be patient. I've learned to be patient. I've learned to be patient. I've been in too many situations where I've been in the trades and my lack of patience has cost me money. And you know what? And bigger than money, it has cost me emotional angst. Okay. And again, maybe it's just me, but the emotional cost sometimes that's associated with trading when I'm not able to be disciplined and have faith and exercise some patience is just, I can't even describe it. That feeling of, oh my God, what's happening here? Oh my God, I wish I hadn't done that. Oh my God, blah, 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 blah. You fill in the blank. Maybe it's just me, but somehow or another, I don't feel like I'm alone in that. But let me keep it moving. So I just want to touch on those things as it pertains to those soft skills that are really, really critical in our journey, in our development as traders. And I hope there's some value sold in me sharing that with you. So I'm gonna stop sharing that, and I'm gonna get right to the meat of what I want to talk about tonight. Let's get this couple of things out the way. And that is, let me open up. That is the harmonic scanner. Okay. Now everybody, I'm gonna share my screen here 1 second. I was just kind of hunting down the background noise. I don't see. Ah, all right. Okay, so let me share again. All right. Everybody on this call, active members, should have already visited the education platform. You have to visit the education platform. There's nowhere around it. We have Rhonda is so good to all of us in that we have access to Telegram. She gives trade ideas, but you can take signals or you can become the signal, and that's kind of like the focus of what I want to touch on tonight is becoming the signal. Now I'm not going to go all through the website. I know you guys are familiar with how to get around here, but I do want to talk about the harmonic scanner for a minute and how you access it. Of course, I just clicked on strategies and then you just come over here to harmonic. So everybody who has the platinum package or above, by default, you have the harmonic scanner. And the harmonic scanner is, if you don't know, the harmonic scanner is a smart chart, I guess is a real simple way to put it. It's smart charting. Because out of the blue, and when you hear people talk about, or thinking back maybe to your initial information session that you attended, and Rhonda or Tabitha were talking about copy and paste trades and that kind of thing. In some respects, they're talking about the trade signals or trade ideas that are shared, but more specifically, they're talking about the harmonic scanner. In the harmonic scanner, out of the box, not clicking anything, not doing nothing other than opening it up. The harmonic scanner provides entries. Let me thicken these up a little bit. Provides entries, provides stop losses, provides take profits on trades all day long. All day long. All right. There's setups out here all day long. This is a setup that we're looking at right here. I'm just trying to scale the page so that you can see it pretty good. Hopefully that's right. Okay. But anyways, I think hopefully you can see it. Well, we have an entry, we have a stop loss, and we have a take profit. You know, how many times I get into on sessions or get questions from people from sessions, and it's like, well, how do I know when to enter a trade? How do I know when to get out of a trade? Those are just basic questions, and I get them. There were my questions as well. Well, guess what? The harmonic scanner, excuse me, the harmonic scanner automatically gives you those values just right out the box. It's set up such that you have different selection of different brokers over here on the right hand side, a list of what, 1, 2, 3, 4, 5, 6, 7, 8, 9 brokers. And if you select any of them, they will give you then pairs, and you just select the pair, and then it will load the chart for that particular pair. And you will see a harmonic pattern. And when you hear harmonics references the geometry or patterns in the market that this system is automatically set up to identify certain patterns, and based on those patterns, then produces a trade idea. And again, this thing is so smart. That's why I call it, like, smart chart. It's based on, some really, complicated or complex, I should say, algorithms and all this other kind of stuff that's built into this. It's resistance is built in, Fibonacci is built in, Elliott waves is built in. There's so many things that are already built into the back end, not necessarily visible to us, but just built into the intelligence that supports the harmonic scanner. So don't sleep on the harmonic scanner. Like I said, if you don't know any strategy about the harmonic scanner, you basically, all you have to do is, like you see here, is just open it up. Just trying to find the background noise again. If you just jumped on, if you could mute yourself, that would be terrific. I think you got yourself. Thank you very much. Again, if you don't know anything else, you just jump on, just open any pair, and again, copy and paste. There's your entry, there's your stop loss, there's your take profit 1, 2, and 3. Okay, it doesn't get any easier than that. Now, there's some things that you have to recognize about the harmonic scanner, so as you know what's a valid trade or not. And just real quick, because we're going to get into a specific strategy here, but with this particular trade idea, it's under, again, FX choice, and oh, just so you're aware, the most recent scans of the on the harmonic scanner are usually within the first 3 to 4 pairs that you'll see at the top of the list. So as you go down the list, it then gets more so into older scans, and you'll see that now. It just so happens that this, I know from just a little bit of experience, that this particular trade has already triggered. As you can see, this was the entry price or entry area, and you can see that price came down. Let's move this over here. Price came down to this entry area. That wick there corresponds with that entry, and of course, then you see price go up. The way to go up to TP2. Okay, and I can just go to, and again, it just gave it to you. Okay, now whether or not you were paying attention or were using this, but and what I'm about to say is not an indictment of anybody. Just hold your calls and letters. But oftentimes when we get involved in this, we get stuck. We get stuck chasing signals and not paying attention to how we can become the signal. Okay, and that's kind of like my theme for today: become the signal. All right, you got this tool in your hand. So again, folks, you're just sitting on Telegram waiting for the next trade idea, this, that, and the other. You can, if that's what you want to do, that's what you want to do. But again, you have this tool here that's programmed. This is this tool's job. This is a big part of what you're paying for with your $174 a month. The ability to use such a powerful tool. And let's just look on one. It's just random stuff. So let's just take the second one, AUD CAD. And this is nothing other than how it presents itself out the box. This is a little smaller. Another example of again, this trade has already triggered, but again, now the trade didn't come all the way down to the entry, but again, the the analysis was correct because again, it's calling for a buy off because you notice when buys are called from this letter D, and of course you can always when there's a entry below a take profit, that's going to be a buy, and when there's a take profit below the entry, it's going to be a sell. So that kind of, again, if you're going to using your academy and those just little basic tools, it'll be very, very apparent to you which is a buy, which is a sell. But what I was wanting to say is that this particular trade was triggered in this area and of course has moved. Let's just see how many pips has it moved away from the area. Again, to give you an idea that like 42 pips in the direction that it was prescribed, which is toward take profit one. So again, it's just an incredible, awesome tool. So just looking to see, I keep getting this background noise. Sorry guys, I keep having to divert my attention. If you just jump on, could you just make sure you mute yourself, please, guys and women? Appreciate it. Thank you very much. I think you got yourself. Thank you very much. Okay, so more specifically, let's talk about a specific strategy that was shared with me, and I'm gonna drop in the chat the link. Well, let me just talk about it a bit first, but please don't let me forget to drop this in the link. All right, there's an educator, this guy here named Manny Q. Guys, if you've been on any sessions with me, you've heard me talk about Manny Q exhaustively. He's one of the top educators, has a library of an extensive library of training and strategies, and they all center around using the harmonic scanner. And one of the ones he introduced lately is called the scanner sauce, okay? And that's what I wanted to talk about today. I don't know if you guys been on any of his sessions, but he rolled that out last Thursday, I think. And a lot of people, it's been really successful for a lot of people, yourself, myself included. So let's just do this. First of all, I'm gonna try to, you know what, let's bring this up. Let's approach this from, I'll use his tools. All right. Okay, this in conjunction with, well, like I said, and like I just demonstrated or attempted to demonstrate, is that the harmonic scanner all by itself is just an awesome tool. You just, again, just take it and copy and paste trades. So when you take then the harmonic scanner and all its power, and then able to lay specific strategies on top of it, you take what's already out of the box, probably an 80–85% accuracy, and then you even increase your probability of accurate and consistent results, up into the 95 percentile, okay? And with this particular strategy, it's as you can see, it's a 5 simple step strategy, and I'll drop the link in a second so you can actually go through the video. But it's a 5-step strategy that anybody can use. This is a strategy that new person can use, intermediate trader, advanced trader. It's just in this last week, it has, I've had some tremendous success with this in just this first week, sufficient that I just wanted to kind of get out and share it with folks who may not have seen it. So like I said, you got your 5 steps, and it's called a scanner sauce, and we use the Hakanashi candles. I'll show you that in a second. It's basically after you set your Hakanashi candles, we're looking for the rejection off of one of the zones. You're either looking for rejection off of a zone at the top of the price action or at the bottom of the price action. And when I come off these are PDFs right here, I'll show you exactly what I mean in a minute. And then we just look for an entry candle, and that's a candle that closes above or below the 4 McGinley. And we'll talk about the McGinley and the other indicators that we use on this particular strategy. And it's real simple to set up and real simple to follow. It's like a check, 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 and then you get in the trade. So then it's a stochastic cross, the awesome bar color, and then the DMI is in control the ADX, whatever you want to call it, and then you get in the trade. Easy peasy, high probability trade. And so, this is just again another explanation, and I'll read this because I think it does a better job of what I was trying to say. In that the harmonic scanner, you can read a fully automated digital pattern recognition software. I never saw this written down, but I had heard from early on when I got here that the scanner is set up and identifies patterns. Because that's, if you don't know, the market it works in a repeating pattern. Okay, so there's just patterns that come and come and come and come and come, and so that's part of what the logic behind the scanner is, that is looking in history for at repeatable patterns, and then displays them, presents them to us, and then is able to identify these high probability trade ideas. And what we're talking about are the confirmation tools, and then, like I said, combine it with the highly accurate strategy, the sauce that we're going to talk about. These are the indicators that we use on the scanner sauce, scanner sauce strategy. And we'll talk about these, the Heikin-Ashi candles, the Don't Chain channel, the DC, McGinley's, the stochastics, awesome oscillator, and the DMI. And if you're brand new, don't get off put by the names of some of these indicators. Basically, you have 4 types of indicators. You have trends, you have momentum, you have volume, and then volatility. And so what we're taking here is a indicator from each one of those buckets, and then laying it on top and using it again as part of our confirmation checklist. And if you're a trader, you'll know that's what you're looking for in trade. That's what you're looking for in high probability setups, is confirmations. And nothing, of course, is 100%, but you get those confirmations to put yourself in as high probability for success as possible. So step 1, let me see if I can make this bigger. And like I said, we'll go through this in a second in the chart, but I just wanted to, since this is all laid out, I thought that this would be a good way to introduce it. Step 1, we see whether or not price hits the DC channel. You'll see the DC channel, but basically is the DC channel is the upper bounds of price, okay? And that's represented here with this red line at the top, and it's represented with the blue line at the bottom. You'll see it more clearly when I move into a live chart. But that's real simple. Step 1. Step 2, we are looking then to see if with the use of our Heikin-Ashi candle has closed up and crossing the 4 McGinley. Again, you'll see that in a minute, but it's depicted here, highlighted here with the arrow, and it has a flat bottom on the buy and a flat top on the sell. Now, the purpose of the Heikin-Ashi candles, if you don't know, Heikin-Ashi candles, and again, that's just a type of candle. When you are in your charts, you can select a variety. You can select hollow candles, you can select just regular candles, you can select line charts, or Heikin-Ashi candles. Heikin-Ashi candles work really good with indicators because they also represent momentum, and they're easy to read. It's not a lot of noise. Typically, you're gonna have just your red and your blue together, and then the flat bottoms and no wicks represent give a representation, I should say, of certain level of momentum in the market. Step 3 is simply, and just make this a little bigger so we all can see this. Step 3, we add one of our indicators. We just make sure that the stochastic is we had a blue and a red, and depending on what direction, in this instance, we would be looking for the blue to be over the red. Now, and I encourage you guys, dig a little deeper if your curiosity moves you to do such about these indicators. But the stochastic indicator is a indicator is an indication of whether or not a particular pair is overbought or oversold. And where that's important is because when something is oversold, it will typically then switch into a sell. When it is oversold, overbought. I'm sorry. When something is overbought, it will be at the top of this region here, and then typically find its way back into a sell as it will trend down. And if it's oversold, it will be in this 20 area, and I'll show this to you more clearly in a second. It'll be down in this 20 area, and it's more so an indication that the price is going to go into a buy. And that's what you see here is depicted in this screen with this arrow. See how the band is kind of dipping down, and actually didn't get that deep, but still it was dipping down. And in this instance, the blue is over the red. So again, that's another confirmation for us. And then we got two more confirmations in that we want to look at the awesome oscillator and see it's good here because we really don't get into a whole, go a deep dive into the different the technical stuff associated with each of these. I encourage you to research it, but for a purpose of this strategy, and that's why I say it's good for beginners to advance, we're just kind of looking at the colors here. So if we look at the awesome oscillator, all we're trying to determine is, I'm sorry, I was looking for the background noise. Okay, thank you. When we look at the awesome oscillator, all we're trying to determine, and actually with each of these indicators, all we're trying to determine, if you guys could just, whoever just jumped on, or just make sure you mute yourself, please. Thank you very much. Said all we're trying to determine basically, and again, just to make it as simple as possible, who's in control, the buyers or the sellers. And we're just using these colors to say, okay, if it's blue, the buyers are in control. If it's red, the sellers are in control. And you want to move with, or have a confirmation based on, again, which direction that you're intending for your trade to go, and then who's in control. When buyers are in control, you buy. When sellers are in control, you sell. It's no more complicated than that. It's no more complicated than that. That's why I say trading is easy as heck, okay? What gets complicated is what happens after we push the button and our emotions kick in. So last little area of confirmation, again, and just make it a little bigger. And after this, we'll go live to the chart. But then this last area here is your DMI. And your DMI is, again, you see the arrow here, we're looking for, again, who's in control. Could you mute yourself, please? Please just if everybody just check and see if you're muted. I don't see it, but somebody's not muted, please. I can't see who that is. Could you, everybody just check and see if you're muted? Thank you, thank you, thank you. Okay. And I can't mute my dog. My wife just came in. The dog's real happy. I'm real happy too. But that's how he shows how he's happy. He barks. So anyways, okay. And then the last little area here again, and again, just going by colors, we're going to look at who's in control. In this instance, we see again the buyers are in control because we see the blue line is above the red line. And the other thing that's really, really critical, and I'll show you this in a minute with respect to the DMI, is this black line. It's called the ADX, or the control bar. And that's significant because not only does it tell us who's in control, or which like it represents a strong trend, or the strength of the trend, I should say, is represented by the distance that this black bar is above the 40 line. And I'll show you that in a minute if that doesn't make sense. But again, we just got this, quick checkpoint, 1, 2, 3, 4. And if those things line up, basically you jump in the trade and get pips. I was going to say make money, but only can't say stuff like that. All right, so, oh, okay, then entry, when do I get in? So those things confirm, then you just get in on the next candle, okay? Because remember, I said we get in. I'm sorry, guys. That's what happens when my wife don't come in the house quick. See, oh, here she comes. He'll quiet down. All right, so when you get in the trade, based on all of that, what you just saw, so you got check, all those things confirmed. for you, and then you just get on the next candle. It's simple, it's easy peasy, and then watch the trade go in your direction because you confirm your momentum. Basically, you confirmed your momentum. Give me 1 second, guys. Okay. Well, hopefully that makes sense. Like I said, you just you confirm the momentum, the direction of the trade, and like you now put yourself in a situation for a high probability trade. All right. So I'm gonna stop sharing that for just a moment, and I'm gonna jump into. I'm gonna go back over to the harmonic scale. Smooth that out the way, and that over here, and then I'm gonna lay on the chart, and I'm gonna, like I said, don't let me forget to drop the link to the actual video that Luke does on this, so you guys can see exactly what we're talking about. So let me just say this: you can use the pairs from any of the brokers. Okay, so but I kind of follow those that know better than me, have more experience than me. Manny Q uses Hot Forex. It's based on, I guess, his experience that with Hot Forex, you get more accurate trade ideas. I'm not sure how he arrives at that, but I just follow that. Now, this what I'm talking about, this scanner sauce works on the 4 hour, the 1 hour, and the 15-minute. I use my sweet spot is the hour. I just again, I have a lot of success with the hour time frame, especially with this particular strategy. I use smaller time, actually, well, that gets into a whole nother thing. When I'm using, looking for swing trades, I'll do a little something different, but I don't do that here. But anyways, okay, so let's take a quick look at when I load my chart with those settings that we just went over. And we may or may not find anything in that. Again, it's Friday after the market, and a lot of these have already run. But let's see what we get here real quick. So I'll see what we might just be able to identify from a historical standpoint. All right. So now here's one, for instance, that I would probably keep my. Well, let me just identify those indicators that we talked about first of all. So this band here is where I got my red arrow. This red band and this blue band, these represent the D and the DC. Okay, that's the they'll chain. That's the could you guys, somebody check their mic? I'm hearing a lot of wind or something, and for some reason I don't. Okay, well, oh, here we go. I found it. Okay, all right, thank you. All right. I'm sorry, actually I clicked on something else and it took me off the chart. But I wanted to just kind of, so we can kind of just identify the particular. I'm on the 1 hour, click on GBP CAD, and bring my settings back on. And once you load the settings onto your harmonic scanner, you can save them and load the chart layout when you get back onto the chart. Let me turn this off. This is a little something extra I have on here, these SARs. It's not part of the strategy, so I'm not going to talk about that. It's a little personal thing. But let's look at, oh, the other thing just to be aware of, when you're on the harmonic scanner, and again, the scanner, the way the scanner is set up is that it gives you entry points. And again, I'm just using my arrows, and entry points are either here at the top. Entry points are here either, come on, get out the way. Either here at the top of the price action, or at the bottom of price action, because as you know, price is either going to go up or price is going to go down. Okay, so So what we're looking for is price then to react off of one of these bands, and that's your DC band. Again, the red, if price reacts, we're going to a sell. If it rejects off of the lower band, the D, then it's going to, off the blue band, it's going to go into a sell. But here's what I would just caution you about. Now, this is another D. This is the harmonic D that's represented, that's created with this particular pattern, and that is the one that usually lines up with the entry. Okay, so when we look at this pattern, we can automatically know that this particular setup, and again, harmonic scanner is not 100%, and this, I'm glad we look at this because we see an instance here where price swung way below. Here's the entry, but price swung way below entry. But again, that is why we have stop losses, but it swung way below entry. And at this point, this trade idea has been invalidated because again, it is swung so low underneath the identified entry. Now, is it still in my book, is it still a buy? Yep, it still is. Okay, would I get in? Probably just not yet, or I'd probably wait for price to come back up into this area and take another look, because again, it's well, in some regards, it's, well, let me make it short. No, I wouldn't waste my time. All right, let's just click on the next one. All right, so in this instance, we're looking at the AUD NZD defaulted to the 4 hour. Let's go back down to the 1 hour. Okay, and we have our McGinleys. Let me take these off too. I'm gonna take only one. I just want to see the full McGinley for right now. Take off the 20 and turn off the 4, because all we're looking for is where price. I might have to go back a bit. Let's take this off. What we're looking for is where price has closed on the other side of the McGinley. And we see here that price has actually, the price has kind of just been consolidated or actually accumulating. And again, if you're not familiar with that term, this is actually a good thing. Price is accumulating. So orders are accumulating through here. And that is a really good thing, because that means it's just going to be a move. Now, what we're looking for here is for price really still, again, needs to come down into this area, okay, to represent, because by default it's representing a buy area. But what we would look for is this green line, which is the 4 McGinley, to and again, it's going to track price. That's what the 4 McGinley is going to just move right with price. And as price dips down into this area, we will be looking for that candle, a blue candle on the way up, to close on the upside of that particular 4, and then we would just start. That's when you just follow, then take the TPs on up to that are identified for you. But let's find one that we don't have to use our imagination on. Just check on USD CAD. It gets a little. Oh, here we go. I think we got something here. Okay. Yep. We got something here. All right. So, just going through the scanner then real quick. What we have here is that price. You can see where price is rejecting off of the D and the C. That's our channel. It's like I don't know if you're familiar with Bollinger Bands, but it's basically like you have an upper and a lower limit for price. Well, not really limit, because again, it doesn't limit price, but the high, it kind of tags the high and the low bounds for where price has been. And this is the upper boundary of where price has been, and represented here. So we got a rejection off in this area where that D is, and you see that corresponds with the entry. So now we're seeing, okay, price is moving in our direction. So where do I get in? Where do I get in? And again, step 1 is we're going to find where price closes. Let me see if I think I can make it without getting this distorted too much. We're looking for where price closes on the other side, the downside of the green line or the 4 McGinley. and that is this candle. You can argue about it might be that. No, but it really would be this candle right here. Let's make this, let me change this to blue so it kind of contrasts with the red. So on this candle right here, this candle closed below the 4 McGinley. All right. So and then okay, so that's my visual cue. So what do? I start looking to see if other things line up for me in the chart. I'm gonna put a little dash line in here. Okay, so that's step one. Price has closed on the downside of the 4 McGinley. Now I need to find out, based on the stochastics, whether or not I have the red on top of the blue. Again, I'm just trying to see who's in control. Yes, I do. I have the my confirmation on the stochastic. On the awesome oscillator, again, just need to see who's in control. The sellers are in control. That's fine. You can see the oscillator is giving me a red and then I come down here to the DMI just to get a confirmation on my trend, and boom, I have that confirmation there as well. So we can see, and I'm gonna talk about this because now I have my red line above my blue line, and most importantly, or equally, the final confirmation here is that I have, let me drop a horizontal line in here. I'm gonna drop this horizontal and change the color on this. Learn how to use your tools here too, folks. They'll really save you a lot of time. And again, if you're like me, you know, the visual cues are just very, very helpful. Unfortunately, the scanners that exist today, you have to kind of keep putting some of these lines in. They don't stay for you. I'm gonna drop one in there and make that a 0. But it's just real helpful for me anyway. It's just to set those lines in, but it's not mandatory. Okay, so we need the control line above the 40, and we have that. Okay, that's the 40 is now represented by that gold horizontal line, and at that point in time, at this point in time, we have all of our checks. We got the Hakanashi candle closing below the 4. We have the red above the blue on the stochastics. We have the confirmation that the buyers are control on the oscillator. We also have confirmation here that the sellers are in control with respect to the DMI, and we have our ADX, or our control line, this black line, pointing up above the 40. So guess what do we do? Next move is simple. We just now, at this point, you just wait to get into the, you just get in the trade. Where you get in the trade? You get in the trade on this next candle. So that becomes your entry. So now you entered on that candle. Now you're in the trade. Okay? So easy peasy, right? So now you're in the trade, and let's see what happens. So you're in the trade, and your target, okay, so you're saying, okay, well, you got in here at this, because you now actually, and again, this is for the sake of, again, probability, so that you're not, you wouldn't have been sitting in much drawdown anyway if you got in up here. But again, you've actually now confirmed yourself, pippage, I guess if that's the right word. Let's do this. Let me drop this horizontal ray in here, because you would have got in the trade right about there. So you would have got in the trade right where I just dropped it and picking this up so you can see it. You would have got in the trade right on this black line, or somewhere in that area, and then you see where price is now. Price came all the way down to here actually. So let's drop a line there. So you can really, I use a lot of lines. Again, it just helps me. So you're almost at TP3. So here's the bottom line. Based on those 4, you use those couple of, shucks. If you use those 1, 2, 3, 4 confirmations, got in the trade, you would have captured in a couple of hours. You would have then been involved in a 70 pip trade. A 70 pip trade You would have had your drawdown. If you got in there, you would have had a little bit of drawdown. Let's look at this realistically. You would have had a drawdown of about 20 pips, about a 20 pip drawdown, and then boom, another. And then the next thing that you would have seen is 50 pips. The next moves that you would have seen would have again been 70 pips in profit. So again, this sauce strategy again flips the script. It puts you in the driver's seat from being a signal taker to becoming the signal. And again, it goes back to those 3 slides that I talked about in terms of, you know, you having the discipline to execute this. And again, and the discipline comes in here because you got to have all things lined up. If this condition, I'm clicking down here on the DMI, if this condition was not in place, you don't take the trade. If this condition was not met, you don't take the trade. That's your discipline, okay? Your patient comes in that when like I said, you got in on this candle and we just identified it went 20 pips in drawdown. So the faith comes in that my analysis is going to hold up here. And so when it goes 20 pips in drawdown, again, if you're not over leveraged, it doesn't then, you're not looking at your phone and getting emotional, making some emotional reaction, jumping out of the trade because you're 20 pips down all of a sudden. You're having the discipline and the faith that your technical analysis is going to hold up, because again, all you got to do is look at see what the indicators are at, and as long as everything, all the momentum is still swinging in your favor, you're in pretty good situation. And then your patience is then necessary, because again, now all you got to do is be patient and get the 70 pips. And that's where, again, it just goes full circle to your discipline, your patience, and your faith. Not necessarily in that order, but like at the end of the day, your patience would have paid you 70 pips in this particular instance. You're in and out. And again, now this is on the hour chart. So just to you get in here, you got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 11 hours. That's a day. This was. Let me set my chart time correctly. So this would have occurred about, this was today, the 4th. That 5, what's 5? 5 is 5, make sure I got my time straight. Yeah. Okay. So actually, this would have been at 5 this morning. So at 5 this morning, again, and I'm gonna show you this last time. This would have been 5 this morning. This is how you would not have missed this, because you think, ooh, 5 in the morning. Oh, well, let me just say this. You may have missed it. Okay. But again, these opportunities are swinging your way all day long. Find out what's a good time for you to trade. Maybe you can't trade it, I guess that's toward the latter part, getting toward the latter part of the London session, or middle of the London session, I guess. Maybe you're not trading at that particular time. Maybe you need to look at situations like this and say, hey, there's a lot of volume available during the London session. Maybe you need to be up at 5 o'clock in the morning and put this trade in and go to work. And then at 5 o'clock in the afternoon, you get off work, you got whatever you got in your account now. You know what I mean? So you decide, but again, understand the correlation between time and price, but that's another discussion. So I'm gonna wrap up, but I didn't have time to go into too many other examples here, and hopefully this one did make sense, because I can go into example after example. Let me see one thing before, if I can pull this up real quick. I just wanted to give and again, this is all shout out to Manny for coming up with this. Let's see. Let's me, if I can, let me stop sharing that. And Hold on. This is gonna be good. This is gonna be good. Just hang with me 1 second. Where'd it go? Why is that? Okay, all right, here we go. Let me share this. And then I'm gonna jump off of this. All right, these are just some of the let me make sure I'm sharing what I'm thinking I'm sharing. Yeah, okay. All right, so this is going back into August. These are some of the ones that I was in. Actually, that was a loss. That was a loss. That hit my stop loss. That hit my stop loss. That hit my stop. Oh, they organized my losses. Okay, that hit the stop loss. Okay, then I think all total. I don't know. I think it was about like 11. It might be. It's probably more than that now. But I think it was like about 13 and 4 or something like that. But that last one, and I kind of record all that. So, and it's all sauce. That's a win. That's a win. That's a win. For some reason, didn't update that one. That's a win. 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 You follow what I'm saying? That's a win. That's a win. Close, break even. I count that a win. I didn't update that one for some reason, but I just, again, it works. It works. So, let me drop the link. Let me drop the link. The other thing too that's really neat about Manny is that he has him and the other, in conjunction with the other harmonics instructors, they have a FRX harmonics Facebook community, and you have to, in order to join, you have to get an invitation from somebody who's already in, and then they you got to have an active account, etc. But then go through an administrator and they bring you in. I just came here. I want to find the link. Hopefully I can find it real quick. I'm sorry, I should have had that at my fingertips. But I know how to get it. I don't see it here real quick. But let's do this. Let me just do this. Let's go into the go to his page real quick, and I'm gonna drop the link, and then we're gonna be out. But I encourage each and every one of you all to take a look at this. Did he put it here? Okay, scan the sauce. All right. So let's open that. Let's grab the link. And I'm gonna drop this in the chat. Boom, you got it now. Take a look at this. All right, take a look at this. Take a look at this. It's gonna change your game from chasing signal to being the signal. And again, this is that vehicle that you can use to, again, take control of your day, take control of your trading, take control of when you trade, how you trade. Because I got into this for freedom. I don't want to sit and burn my eyes out in these charts all day. I saw this thing I want to do. I'm writing children's books and playing tennis, and got all kind of interests and pursuits, as I know each and every one of you all do as well, and families, and all this other kind of stuff that we want to enjoy. So this skill set, and not that you're going to get it overnight, but this skill set allows us to enjoy other things in our life. So and then having something like this sauce at our fingertips really helps us manage the time. So anyways, it's a couple of Gregory. This was great. Oh man. Okay, cool. Can you show us how to set up the parameters? Dawn. Hey, Dawn Lewis, I'd be glad to show you how to set up the parameters. I would encourage you to take a look at that at Manny's video. He does a step. He steps you through each of the indicators. I'm trying to say. There we go. He'll step. Oh. He'll step you through each of the indicators and where to set the parameters. And if you still have questions, yeah, feel free to reach out to me. You can reach me on Telegram. That might be the easiest way. And yeah, I dropped a video in. Thanks for reminding me. Demo, setting our manicure scanner solid video. Yep. Thanks for continuing to watch it. Good. Okay. All right. Thanks, guys. I appreciate you all getting on the call. And if you, just feel free to get at me. I'm on Instagram at Gregory Whitmire. I'm on the Savvy Trader 1 is a website, some content there. Savvy Trader 1 on YouTube. There's more content there. And again, I encourage everybody to go take a look at that scanner sauce video, get that information, plug it into your charts. Let's take control of this thing, guys. Let's take control of this thing. Become the signal. All right, everybody have a great weekend. Enjoy it. If you got a holiday on Monday, enjoy. Oh, from a trading standpoint, the U.S. banks, this is American bank holiday, so Canadian banks will probably also be closed, I think. There is trading, but there will be very, very low volume. It'll be like a Sunday afternoon. I might or might not trade, depending on what I see. I trade with my eyes, not my heart. And so I'll put it this way. I trade on what I see, not what I feel. So I'll see what's available and make a decision as to whether or not I'll trade. But anyways, thank you guys for getting on. Everybody have a great weekend and trade safe.